Alrighty guys, what is going up? Welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about Penn National Gaming, ticker symbol PENN. They have been known for taking a 36% stake in Barstool Sports, which is owned by the one and only social media star David Portnoy, and you can see the stock has pretty much just gone parabolic. Before it was trading for near about $18 to $20, hit highs here at about $40, sold off due to pretty much all the lockdowns. And where Penn makes a lot of their money is on sports gambling, and they do it a lot. A lot of it is electronically, and you can see the stock really just took off, right? It had lows here all the way down at $5, and it ended, up being as high as $141 a share, which is an absolute crazy return. And every single time you have a stock go up that much, that quick, you will always have a tendency to see sell-off. So being the 141, this is going to be, heavy resistance. So this is going to be the hardest resistance on the chart. It's going to be the hardest for this stock to actually break above. But if we actually start drawing out more resistance, you guys will be able to start seeing more of kind of what's going on, where are some good buy points, where is some good sell points. And as you can see, we have some all the way down in here. So one thing that I first noticed when I evaluate this stock is this very important number at about $40, 38 to $40. Okay, this represents the strongest support. This represents the strongest support of Penn. As you can see, it used to act as resistance, and basic technical analysis states that old resistance has a tendency to act as new support. So as you can see, the stock broke above it, had a resistant breakout, consolidated, started falling down, and tapped it all the way down here again, establishing that old resistance is now confirming new support. So the best opportunity to buy Penn stock on the technical side is going to be near that $40 mark. But if we actually go ahead and draw out more resistance, you guys can see it does have some resistance all the way down here as well. This old support is now acting as resistance, so there is a little selling pressure right there. So for me, I definitely think that Penn National Gaming carries a lot of potential, but given that it's almost to that resistance, we could see a little bit of some sell-off coming shortly. But when we evaluate the fundamentals, which is all the stuff that a lot of the nerds care about, like myself, like revenue, earnings, all that. So you can see the revenue is up about 53% year over year, giving a $1.5 billion year for revenue, which is fantastic. And all these other ones they actually did very, very well on. And on their last earnings, they did very good on their revenue. They beat their earnings for their revenue about 3%, which is fantastic. But they missed their EPS, which is earnings per share, which was expected to get about 0.52, reported about 0.22, which is about a surprise of minus 58%. But anytime you invest in a company like Penn, the way I always think of it is this is going to be a company that, one, is going to be a little more volatile. Volatility brings opportunity for sure, and I definitely think if you can get in near and around this $40 mark, that's going to be a very fair price to pick up shares of Penn. Right now, it could be a little overvalued. If we just look at it near that resistance on the technical side, it could be a little overvalued. So the strategy that I would recommend would be dollar cost averaging. Figure out however much money you want to invest. So if you want to invest, let's just say $100 into Penn stock, instead of putting up that $100 all up front, what you would do is you would invest $10 a week or $20 a week over the next 10 weeks or 5 weeks, or you can even do it monthly. But what this is going to do is it's going to develop a good average share price. So if that's just say Penn stock continues to sell off, that's fine because you're moving your average cost down. So when it recovers, you make a lot of money. And the beauty of it is when this thing starts pushing back up, you still have shares. So you're still making money and you're still investing into the stock. So it's a fantastic way to invest into some of these growth stocks. And given looking at this, you can see it does have a great market cap, about $8 billion. And the way I always think of it is, okay, could Penn International Gaming be worth $16 billion? I definitely think it could. It owns 36% stake in Barstool Sports, which is one of the largest social media platforms, honestly, out there for sports betting and sports in general. So I definitely think great pickup, 36% stake. Not to mention the price to earnings is at about at 21, which is extremely low for a high volatile, high growth stock. I definitely think it carries a lot of potential, but definitely carries some risk. So for me, would I invest in it? I definitely would. I picked up shares of Penn near about $24, and I picked up more at about $46 a long time ago. But I definitely think it carries a lot of potential. You have to understand higher risk, higher volatility for sure. For me, dollar cost average it. Don't go more than 5% of your portfolio into something like this. So what that means is for every $100 you have invested into other stocks, I wouldn't put more than about 5% into something like Penn. That's just my opinion, guys. Penn's a great company. As you can see, they've killed it on their past couple of earnings, on their revenue. Their balance sheet's fantastic. They pretty much just need to get more buying pressure. And at the end of the day, that comes with a good catalyst, a good earnings, a whole bunch of stuff. I definitely think Penn's due for a little run up though, given we've had that crazy sell off, guys. So guys, that is it. I hope you guys enjoyed it. If you did, hit that like button, subscribe. We will see you guys later. Remember to stay happy, guys, stay positive, and stay safe. Take care, everyone.